kind of finished the handout for Chapter 2, Part 2. And then I think I'll leave a little, I think we'll end a little early. If you have any questions on the Chapter 1 exam or anything else in Chapter 1, we can go over it. But anyway, so I'm going to go ahead and get started on the Chapter 2, Part 2. Make sure you have the corrected one. I sent out a bad one last class. So if you have the corrected one, that would be the one to use. And just to kind of explain what we're going to be doing a little bit is, so far we've really beaten up the balance sheet. You know, it's all, and we're going to do, I think there's 3 more problems on the balance sheet. So it's going to be, assets, liabilities, equity. Those 3 accounts, we've really all that we've been using, those 3 types of accounts, I should say. Today, we're going to get into the income statement stuff, revenues and expenses, which are a little bit different and I think a little bit more tricky because there's nothing tangible. When you pay out money for a phone bill, it isn't like you get something back. It isn't like you're buying a piece of equipment. Piece of equipment, you pay out money, get the piece of equipment, and you put that in the books. But expenses and revenues are different in that there is no tangible thing usually that comes out of those. So anyway, we will do that. Let me, I didn't do this for this class, and I should be doing this. Today, oops. For one thing, I should be sharing my screen. That's something I should be. Okay, so today, next class, we will certainly have the Chapter 2 practice exam. So next class on Monday, I should say. No, not Monday, on Tuesday. And we may do a problem or 2 out of the books. I'll see how much time we have. This is such a short session. It's only 5 weeks, and there's a lot of stuff to put in there. Okay, so today, this is what we're going to concentrate on, is that. And next class, we'll have Chapter 2 practice exam. And just so you know, we're going to jump to Chapter 4 after this. So Chapter 2, and then we're going to go to Chapter 4. Chapter 3 is a very difficult chapter, so we're going to push that one off. And if there's one that's going to get eliminated, it's going to be that one. Okay, so let's jump into, and I think we did up through, I should pull up my old one. I should do.
I think we were on number 13.
Number 13, okay. Number 13, this is very similar to what we've been doing. We've actually done this, I think, a couple times here. Or no, this one just once, but okay. And this kind of just kind of get us back in that mode. All right, issue common stock for cash. Oh, this will be the first one with the corrected debits and credits. So that's kind of exciting. So we have common stock and we have cash. Common stock, going up or down? Increasing or
Going up.
Yep. And cash?
That's going down.
Close.
What? It's going down. That's going up?
Yeah, we're selling the stock.
Oh, I get it. Okay, sorry.
Oh, you know what? I but you're right. I did this last time. I didn't do it this time. So issued means sold.
Ah, got it. Okay.
And I don't know where the actual term issued came from, but that's You'll see it all the time. So anyway, this is, oh, I'm sorry, I didn't mark it. Yeah, so these will both increase. So it's kind of like both the assets and the equity are going up. Both. There you go. Okay, so common stock is here. And it's going to increase, so it will be a credit. Cash. It's an asset. So debit, and again, you know, you have a problem like this only has two accounts. If you know what one of them is, you know what the other one has to be. Okay, so this is June 3rd, or June 23rd. Okay, so let's see, the debit is cash. And again, the beauty of this thing is that, you know, we don't have to use a calculator for anything. $4,000. Common stock is a credit, and cash is the debit. And again, the book will tell you to put the debits first and credits second. There is no actual rule on that. And this indentation here, it really doesn't matter to me. Most systems are computerized; they don't have this indentation on it. But if you're doing it in your next class, though, or you know, later on, if you're an accounting major, just know that expect the debits first and credits second. One of the quirks of our accounting books. Oh, this thing, let me make this a little bigger. There we go. Okay, received cash from a customer previously billed.
So this would be cash and accounts receivable.
Good.
And the cash increases and accounts receivable decreases?
Correct. Yeah, correct. Okay, so cash is going to go up. And accounts receivable is going to go down. So they no longer owe us whatever, 700. Oh wait, we got to put them in here. Okay, so this will be, they're both assets, right? So cash. Okay, so cash is going up, accounts receivable is going down. So let's see here. And the accounts receivable is going down because they no longer owe us. Now, don't get me wrong. You know, you're trading one asset for another, but you are happy they're paying. Obviously, you're happy they're paying it. You'd rather have the cash than the accounts receivable. I'll put it that way. So while this looks like it's a, you know, a no win, it actually is it's a good thing when those get paid off. All right. So again, we had one similar to that, or close to it. Paid all of the accounts payable, 1,100. What are you gonna do with that one?
Cash and accounts payable are both decreasing.
Yep.
You know, I should make a table for these increase, decrease things. You know, a table that you put in the and both decrease. Cash is going down and the accounts payable is going down because we no longer owe them. Okay, so cash. Down. And accounts payable is going down. Oops. Oops. um, okay, so accounts payable is liability. And a cash is an asset. It's also going down. Yep, so that's it. Okay. 16 is a totally different kind of transaction. I don't say totally different, but it's a different type of transaction. And we're going to run into expenses, oops, and revenues. So from here on out, we're going to kind of focus on those types of accounts, and that there are things that end up on the income statement. Up until here, all of this has just been all in the balance sheet. But down here, we're going to get into income statement stuff. Now, income statement stuff.
The utility would be expense.
Yep.
And then you would pay the utility with cash, right? So that would be the other one, or no?
Well, actually, eventually you will, but they don't say you actually paid it. So let's assume that you haven't paid it.
Okay.
What would it be?
Accounts payable?
Yeah, that's it. Yep. So this is going to be harder. Yeah, so you receive a utility bill, and again, you know the tricky part about expenses and revenues is there's not a corresponding asset, liability, whatever. It's just money going out. Utility bill doesn't let you get anything back for it. Now you use electricity, but that's not an asset or anything like that. Okay, now here is another thing about expenses and revenues. Generally speaking, unless there's an error or something like that, expenses are always debits. And generally speaking, unless there's an error, something strange happens, revenues are always credits. And there's a reason for that. These are unlike the other accounts, and that these accounts just keep growing throughout the year. You know, how much are your revenues this year? How much are your expenses this year, right? So they just keep growing. They keep going up. Now, it is true that, for instance, dividends would go down with a credit, but you virtually never see that because they don't go down. Now, how much is more? 1 month's worth of rent or 2 months? Well, 2 months. You know, so they just keep going up throughout the year. And same thing with revenues. What's more, 1 month's worth of revenues or 2 months? Well, 2 months is more. So revenues and expenses are a little bit different than these other ones. Assets can go up and down. Cash comes in, cash goes out. Liabilities, you know, you borrow money, you pay it off. You know, these can go up and down, and it's not unusual for them to go up and down. For expenses and revenues, it's really unusual for them to go down during the year. You just keep adding up until you get to the end of the year, and you'll know what your revenues, what your expenses are, and then you'll know what your income is. Okay. So coming down here, oh wait, the accounts. Now the nice thing about that is if you run into a revenue or an expense, it's real easy. Why? Expenses are always debits. Revenues are always credits. Okay, so we'll just utilities expense. And accounts payable. Okay, so utility expense is absolutely correct. It's money going out. And expenses are always increasing. What's more, 1 month's worth of utilities or 2 months? Well, 2 months. So these are always going up. So the nice thing about expenses, well, I at least doing the journal entries for expenses. I know expenses are nice, but the nice thing about doing the journal entries for expenses, though, are that they're always debits. And if you think about it, since you have to have debits and credits, you automatically know what the other side is. If you run into an expense, it's always going to be a debit. Whatever this account is down here is, it's going to be a credit, whether it's cash, accounts payable, whatever. Okay, so I can put it there. Okay, accounts payable, is it going up or down? Do we owe more or less?
It's going up.
Yep. So liability, we owe more money now. We owe $200. Okay, so the debit is utility expense. Now, if you look at liability going up, yeah, and so when it comes to things like expenses and that, you're supposed to be aligned through that. A very thick line. I tried to cross that one out. But anyway, they're always going to increase. So expenses always increase, revenues always decrease. Again, unless something weird happens, you make an error or something like that. They're always going to be increasing. Okay, employees for 1 week of wages, $1,600, July 5th. By the way, one of the things also a little bit confusing about this is just knowing what kind of accounts they kind of are generally used a lot. And that's why on the second to last page, you have something that looks like this. I also sent you a separate one. And this has a lot of, the different types of things you'll see for revenues, what they call revenues, different kinds of expenses. These are kind of the common expenses that you'll see. Assets. And so here's the liability. Now, let's think about our what am I doing? Great part. Okay. All employees for 1 week wages, $1,600. Now, we haven't paid them yet, right? So what kind of account is this going to be?
salaries payable and salaries expense.
Yeah, probably salaries payable or it can be wages payable, either one of those. And wages, expense, or salary. Salaries expense. We should have salaries expense. Oh, I don't have it. There. Oops. Anyway, so yeah, but yeah, and again, usually it's the same thing as accounts payable. And as a matter of fact, on the test, if you put accounts payable, that's fine, because the key thing is it's a liability that we have to pay. Okay, so again, so salary expense, you got to say wages expense, we want. Okay, so now, nice thing about expenses, they're always going up. Salaries payable, is it going up or down? Yep, we owe more money now, right? So that is going up too. I can mark it correctly. Okay, so salaries, expense, you guys put weight either one. And salaries payable. Okay, so and again, the nice thing about expenses for doing journal entries anyways is that there's only one choice, right? Okay, salaries payable is going up, so that'll be a credit. So the debit is the expense. Again, I don't care the order. You put your debits first or credits first. Another class, or if you're working from a textbook online, debits go first. And if you're going into accounting, I'd say get in the habit of doing that, just because you're probably going to be putting stuff in online. You don't want to get dinged for something, It's actually not an accounting rule, but they'll still take points off. Okay. So common stock to an investor. This one is something we already had. What accounts are we going to use?
Common stock
Mhm.
and accounts. Wait, I don't know that one.
Well, we sold it. So
Right.
you
Okay.
gave
So
them-
cash.
Yep.
Okay.
Yeah, this is actually one from the balance sheet. So common stock. Oops. I gotta do something like keyboard here. And so common stock is increasing. We got more owners now. And our cash is increasing. My keyboard, not that I'm a great typer anyways, but I got two computers now on the same thing. So when I put this other keyboard in, for some reason, it messed up my desk. And the reason I got another computer is that I got a Windows 10. Like half my stuff runs on Windows 10. Half it runs on Windows 7. Anyway, okay, so Oops, none of those. Cash. Asset going up. Common stock is equity. And it's also going up. And so this is us selling ownership in the place. This is actually not a sale. This is not a sale like you know. If Walmart sells stock, that's not part of their sales. It's just part of their owners. So even though you see sold, it's really not like a revenue. It's you're selling ownership. Okay, so cash is going up. Common stock's going up. We have more owners now. And by the way, you might be wondering, well, what if you own somebody else's stock, right? What if you own IBM stock? You don't call it common stock at that point. You call it an investment. So if you own a stock of another company, it's categorized as an investment. I don't have investments on here. Okay. My new handout needs a little bit more tweaking than I expected. But investments are an asset. And so if you say, okay, you take some of your cash, invest it in something, those are investments. If they tell you that you sold common stock or you issued common stock, that's your ownership that you're issuing. Okay, paid dividends to stockholders. Now, this is actually not an expense. I think we talked about this. Do companies have to pay dividends?
No.
No. So it's not an expense. It's not a necessary cost of business. So it's separate. This is dealing with our owners. This is giving money to our owners. So we do it through dividends, and you kind of we just use the dividends or dividends declared. Just dividends is fine. But we're doing dividends, and dividends are somewhat similar to expenses. They're not expensive, but they're similar in that it's money going out and there's nothing coming back in. There's no, you're just paying money out to the owners. And like expenses, whenever you pay out the, it's going to keep going up as the year goes on. Again, unless there's a mistake, these will always be increasing. Okay, what did we pay them with, do you think? We paid for the dividends.
Cash.
Yep. So we send out checks to the owners. We paid cash. Cash is going down. Okay, so dividends. Again, nice thing about dividends. Dividends are debits. And our cash is an asset, and it's going down. Okay. So cash is going down, and we're paying this to our owners, it's not an expense. There isn't anything called dividend expense because it's not necessary for the business. Expenses are generally things that are necessary for the business. These are just payments to the owners. And so, and these go on the statement of retained earnings. Dividends. Statement of retained earnings. So it's not an expense because it's not necessary. And generally, you don't have to pay dividends. Actually, you don't have to pay dividends unless the board of directors declares dividends. Once they're declared, then you're legally bound to pay them. But if you don't declare them, you're not legally bound to pay them. Okay, perform services for cash. Uh, 280. Well, let's take the easy one.
Cash and revenues.
Yep.
Both increasing.
Oh, what am I doing here? So cash and some kind of revenue. It could be service revenue or something like that, but with revenues is fine. And again, that goes back to this one. This thing. Oops. You know, so you'll see revenues or earned revenues, service revenues, repair revenues, sales. Sales and revenues are the same. Fees earned. So these are, you know, common things that you'll see that are all the same thing. I'll tell you something that's a little bit strange about U.S. accounting, and that is that we actually don't have any hard rules as far as what you can name an account. You know, you can name it anything, and you know that could be that can be a problem because you know, a lot of times someone will name an account that may be obvious to them. I helped a student who was actually doing an internship at a not-for-profit, and they had an account that was called customer holdings. So I didn't know what that meant. Holdings usually you invest in something, or so it made no sense. And we dug through and we kind of found out that was that's how they were accounting for the money that people pledged that was actually collected. I have no idea where that came from, but again, you can and the country that I don't know if they still do this or not, that was kind of neat was Germany. In Germany, they had a numbering system, so you could call the account whatever you wanted, but there'd be a number with it. And so, for instance, all the numbers 100 were cash. So whatever you called it, Rumpelstiltskin, if it had a 100 number on it, it was cash. So they had a kind of a numbering system that they required people to use. But so it's kind of if you're wondering why all these are what are all these different names and what they mean in that, there generally isn't a requirement as far as what they're called. They'll tell you how to account for it. There must be an expense or whatever, but the actual naming of it is usually kind of up in the air. Okay. Oh, okay, yeah. So cash and revenues. Okay, so revenues. Nice thing about those, they always are increasing. Oops, I didn't put it in here. So revenues are always increasing. Which means revenues are always credits. Theoretically, if they went down, they'd be a debit, but that happens 1 in a million times or something. Okay, so the cash, is the cash going up or down?
Up.
Up, yeah, they pay us cash, so it'll be increasing. And again, the really nice thing when you run into a revenue, it's always a credit, whatever goes on the other side, whatever it is, it's going to be a debit. So if it's cash, if the accounts receivable, if whatever. You know, if they gave you a potted plant, whatever it is. Okay, so cash is going up. Revenues are always going up. Okay. This one is a little bit tricky. We build the customer. So
That's accounts receivable.
yes, that's exactly what it is. Yeah. So if we build them, obviously they haven't paid yet. So it'd be the accounts receivable. And let's go on the other side. Let's go to the other account. I'll give you a choice. It's either a revenue or an expense.
That'll be an yeah.
Actually, gonna be a revenue.
Oh, revenue, because then you earn money from it. So
Exactly. We perform the services. Okay, and so this would be. Oops, I didn't put it up here. Okay, so accounts receivable, is it going up or down? Do they owe us
it's
more?
up.
Yep. And revenues are always going up. So revenues and expenses are always going up. Again, unless there's something wacky happens. Okay, so we have a revenue.
This chick.
And accounts receivable is an asset. Yeah, but that's it. Oh, it doesn't matter, I guess, right? And that asset is going up. Actually, the last one, July 29th. Oh no. I mean, we got these chronological order. Okay. Okay, accounts receivable. I should probably talk about this one for a second. This is another thing that's kind of, it might not be intuitive as far as what we do for accounting. When we perform our work for somebody else, whether we get paid or not, we count it as a revenue. So we haven't been paid for this. So a revenue is not just when someone gives you money. It's not just when someone gives you cash. When you finish your job, you're part of the job, you count it as revenue. And on the other side goes accounts receivable. They owe you that money. So in normal, what they call GAAP accounting, which I kind of talked about, but the normal accounting rules are that you recognize revenue when it's earned. Oops. Do something here. So you recognize revenue as it's earned, not when the cash comes in. The cash might not come in for a month, but you're going to count it as revenue right now. Oops. I should say not necessarily when cash received. Now, if you do a job and they pay you cash, you recognize it as revenue. But if you do your part of the job and they haven't paid you, you still count it as a revenue. So that's different than what a lot of people would think intuitively as you think about accounting. But when your part of the job is done, when you've done what you're supposed to do, it's a revenue. Okay. 22, civil services made to a customer on account. 810. What accounts?
I'm having a hard time figuring that one out. Sales services, so would that be sale? Well, that's revenue sales, right?
Right.
And then that would be accounts payable.
Close. Now we did the service. So
Okay, so accounts receivable.
correct. Yep. It's actually the same as the other one. It's just a different way of wording it. And again, a lot of times I'll put these different wordings in because you'll see that in the textbook. Not necessarily that I would, okay, so sales services. So you get revenues, or you could say sale or sale of services. Either one. You just put it exactly what it says up here. Sale of services. You find two revenues, service revenue. Now, by the way, and a lot of times companies will have what they call a chart of accounts, and those are the accounts that they use, and that's helpful because then you know exactly, what they're going to determine. So a chart of accounts might look like, this. And so if you're putting something in, it's going to have to fit into one of those accounts or whatever, whatever their wording is. Maybe they use this for their revenues. So a lot of times they'll have what they call a chart of accounts, and in those accounts would be what you have to call it. Okay, yeah, so this is just like the last time. So accounts receivable is going up. They owe us now 810. Okay, revenue, always credits. Whatever goes on the other side, debit. Oh, what am I doing? Oopsie daisy. Not paying attention. Not so much what I'm doing, it's what I'm not doing. Pay attention. So accounts receivable going up with the debit 810. And by the way, next week we'll see, right now these look like something completely different than say the financial statements. Next week we'll see how that kind of comes together, how these actually turn into financial statements. Oh, sweet. Let's save this at some point. Okay. Wages owed to employees at the end of the month, 390. We actually had one similar to this. So what accounts are we going to use? I'll do the hard part. I'll put the date in. What accounts are we going to use?
That would be accounts receivable and, no, I'm sorry, accounts payable.
Yep.
And an expense?
Yeah, that's it. Yep. So probably accounts payable. You can also put wages payable. The book if I tell you to put wages payable, but I will definitely take accounts payable. So you owe somebody basically. I think I'll try to spell it correctly. And so yeah, since it could be salaries expense, could be wages expense, either one. And don't get so worried about the salaries expense or wages expense. I will not mark off for that. Okay, so wages payable. Do we owe more wages, or do we owe people more money or less money? Are the liabilities going up or down?
We owe more.
Yep. Good. That's the hardest thing is the liabilities, I think, because you're so used to them being a negative amount, but they're actually increasing means you owe more. Okay, and expenses are always. That's the nice thing about expenses. They're always going up. Nice thing for making journal entries anyways. They're always debits. Unless something kooky happens, they're debits. And the other side, wages payable would be a liability. Could be accounts payable too. Nothing wrong with that. Wages expense, 390. And we owe these people our wages, so this will be wages payable. And again, when it comes to things like this happens all the time. This happens. And some companies will have it daily, but a lot of times it'll be weekly or monthly or whatever. But those are very common ones. You get kind of used to these. And by the way, another thing you kind of notice here is expenses will oftentimes go with liabilities. So expenses and liabilities a lot of times will go together. Revenues and assets go together. Either accounts receivable or cash. So a lot of times these will be, the assets go with revenues. A lot of times the liabilities, expenses go with liabilities. A lot of times they're related. You can pay expenses with cash too, but a lot of times it'll be accounts payable. Okay, paid current month's rent. $2,200. What did we probably pay them with?
Cash
Is the cash going up or down?
down.
Well, it's probably going to be on the other side.
Rent expense.
Yep. Oops. Okay, so cash is decreasing. Expenses are always increasing. And again, these journal entries, again, if they're awkward, they should be. The first time you've seen it and it's a 400-year-old shorthand, someone else's 400-year-old shorthand. So they look tricky. They are. There is a certain genius to it, though, that you can record an entire transaction. In this case, with just a few words, a couple numbers, actually just one number even. Okay. Purchase supplies on account. This one actually is somewhat tricky.
Well, that would be cash.
Yep.
And
Well, wait a minute.
yeah, it does say account. So would that be accounts payable then?
Yep, accounts payable. Good.
And supplies. It's an expense.
Close. It will be an expense, but not yet. Let me explain that. This is one of those. This is kind of a strange one. It has to do with inventory, and it could be supplies, it could be inventory or whatever. That when you first buy it, it's an asset. As you use it, you expense it. So when we first purchased the supplies, theoretically, we're no better or worse off. We just paid $160 to cash, and I should say it was a bad analogy because this is an account. But anyway, you get the supplies. The supplies have a value, and here you have a liability. So theoretically, we're not any worse off. We got these assets, we got the liability for the same amount. It's we're no better or worse off. However, we expense these supplies as we use them. So when you first buy them, they're not going to be an expense. Later on, as you use them, they'll be an expense. You say, that sounds confusing. It is. That's what chapter 3 is all about. That's why we're postponing chapter 3. So at first, it's going to be an asset. Okay, so the accounts payable increases. We owe more, and supplies increase. And we'll only expense those supplies as we use them. So if we use them up, whatever they are, garbage bags. You expense them. Okay, so supplies and accounts. Oh, wait, I'm jumping ahead here. What am I doing here? So the supplies is just an asset right now. So, you know, for instance, if they, at the end of the next month, we used up all the supplies, then it would turn, you go from being a supplies into supplies expense. Okay. Oh. 26, paid for the supplies purchased on account at number 25. Okay, so we paid this off. So what would the journal entry be? Oh, well, if we're paying that off, it's going to be accounts payable definitely be in there. Oops. And what do we pay them with?
Cash?
Yep. Okay. Let's take the easy one. Cash, is it going up or down?
Going down,
Down. And accounts payable?
going down.
Yep. So we no longer owe $160. Okay, so both going down. So accounts payable is going to be the debit. It's decreasing. Cash is also going down. Oh, I'm sorry, I don't have a 160. And so this is just kind of a timing difference, basically. You know, one of the things you think about accounts payable and accounts receivable are both just timing differences is when you get the cash in. You still recognize, you know, we recognize the purchase up here, even though we didn't send any cash yet. We recognize us buying the supplies. So, you know, when we come down here, this is just, you know, we're just taking that off the books because, you know, it's almost like that's kind of a placeholder, you know what I mean? So this is bought the supplies on the 9th, paid for them, or excuse me, bought them on the 29th of August, paid for them on the 9th of September. You know, and then this accounts payable goes away. It's gonna be debited, it's gonna be credited, it's gonna be zero. Which we'll learn more about next week. Oh, 27 is a very, very tricky one. Received cash in advance. No, received an advanced payment from a customer. September 12th, 21. I hope I didn't write it that way. So received an advance payment from a customer. So the customer paid in advance, $220. Now, notice that this is different than accounts receivable. This is the opposite. This is they paid us. We haven't done anything.
So that's accounts. Okay, or no, that's cash.
Well, there's gonna be cash, and the first thing you said was actually right.
So it's accounts receivable and cash.
It's actually not accounts receivable. It's not, I think you first started out saying accounts payable. It's similar to a liability. No, it's similar. It's very similar to a liability. Why? Because if you don't do the work, you got to pay them the money back.
Oh,
So
right. Okay.
this is actually, we haven't talked about this. This is what they call unearned revenue. Sometimes called customer deposits. And a lot of times this, when someone pays in advance, maybe you give them a better deal if they pay in advance. Maybe they have questionable credit or whatever. You would say, okay, I'm not going to do it unless you pay me ahead of time. Last time you didn't pay me for 3 months, so or whatever it is. So this is called unearned revenue. Kind of a bad name because it's really not a revenue. Unearned revenue is a liability. Now, as we do the work, as we work it off, it'll become earned revenue. But initially, this is going to be called unearned revenue. And it's a liability because if we don't do the work, we got to give them the money back. So this would be unearned revenue. Oops. And unearned revenue is really not a revenue at all. Which is why I say it's a kind of a bad name. Okay, so they paid us in advance. So the cash account, is it going up or down?
That would be going up.
Yep, yeah, they paid us ahead of time. And the liabilities are going up too.
Up.
Exactly, because we owe them. If we don't do the work, we owe them $220. We gotta give them the money back, basically. So until we do the work, it's a liability. So again, for whatever reason, you click this advance payment. Once they give you the money, and if you haven't done the work yet, it becomes a liability. So unearned revenue is really not a revenue. It's more like a payable. Cash. Okay, so our cash goes up, but our liabilities also go up. September 12th. Okay, so oops, cash is going up. Unearned. Oops. And this is a liability. And it's also going up, 220. The liability going up. Because now we owe more. We owe $220 now. Until we do the work, if we don't do the work, we have to pay it back. I have no idea where I put this one now. It's not even a number. The cash advance from customers for services. It's the same as that one. This is unearned revenue. I didn't even put a dollar amount on that one.
That's basically like the same thing as the other one.
Yeah, except that, I didn't put a dollar amount in. This is my new handout. It's not. Unfortunately for you guys, it's a newer one. And by the way, you guys have probably picked up on the fact that I'm more of a classroom teacher, so the online stuff is not as whatever intuitive to me. But I should have put a dollar amount in there, even if it was for the classroom. So anyway, yeah, it would be the same thing as this up here. For whatever, whatever amount it would be. But it's basically when someone pays you ahead of time. I didn't give you the amounts there, so. Oops. Okay. But yeah, so unearned revenues when someone pays you ahead of time. And this one, I don't think I got from the book or anything. This was like something I would have written. so I can't blame anyone for this one except myself. Okay, hey, and that's it for the handout. So again, journal entries, they're wacky. I mean, they're just they're basically taking this and condensing it into a shorthand. So okay, what do we need? We need a date. We need what accounts we're using. There should be at least 2 accounts, or else the balance sheet isn't going to balance. And the amounts. So we need date, accounts, amounts. That's it. And we can, make a journal entries. So they come about from a shorthand for this. That's basically why, and that's why they're called journal entries. If you think about the term, it doesn't really make any sense anymore. But that's where they came from. All right. Any questions on that?
No. I had a question about the exam. Where do we find that?
I should have sent it in the email. They should be in your email from last week. I should have sent it.
So, okay, I just want to make sure. I wanted to make sure I had it right because I didn't know.
Yeah,
so it's a Word document.
Yeah, and if you're looking at course files, the exams are emailed to students. And here's the reason: there's different forms of the exam.
Mm-hmm.
So, you may have form A, you may have form B, whatever. So if I put those on here, which it's not that I don't care about seeing other forms of the exam, but you need to turn in the right sent you.
Yeah.
If I sent you exam A and you turn in exam C, but if you look on here, it's not going to tell you which exam I sent you. So they'll be in the email account, and then they get submitted here.
Okay, I see it. I see it now. So you just want I guess we just would highlight the correct answer then.
There's
for the multiple choice ones, and then there's a chart. Okay. Excuse me, sorry. So just fill in the chart and then highlight the correct answer for the multiple choice ones.
Let me take a look. I think we do a the in class. Did we do the multiple choice questions together in class? I can't remember.
If we did, I might have missed it. It might have been the one that I missed last week.
I mean, we did the poll where you made
Yeah.
us.
Yeah, I remember. Yes, yeah. So this is just part 2. So part 1 we did the multiple choice questions, and yeah, if you look through that video, I think I give the answer. I'm pretty sure we give the answers on that.
Okay.
And what they are. And again, these are basically the same types of problems as you see on that one. Sometimes I put the ones verbatim. Sometimes I change the numbers, but in the definition ones, I just leave. They're there to make a point, and And by the way, the CPA exam is like that too. CPA exam, maybe use questions. If they have a good question, you know,
They do what on the CPA exams?
they'll reuse questions. You know, so if you if you're studying for the CPA exam and there's questions that they used in the past, you'll see them come up on in future exams too. So I mean, this isn't that unusual in accounting. Quite honestly, there's only so many ways you can ask, you know, what are debts and obligations of businesses. I mean, it's there's a handful of ways you can ask that. So I mean, the same question coming up again is not that unusual.
Okay.
Any question on this? We're gonna, so next class, next Tuesday, we'll do the practice exam, and we might do a problem or two out of the book. We'll see. This is such a quick course. We're, you know, next week is halfway through it. So I'm gonna, we'll certainly do the practice exam, and I'll send out the exam for it on Tuesday for chapter 2. But it's gonna be basically doing journal entries, and you know, the more I think about it, I'll probably just cut it down to just journal entries instead of multiple choice questions. You know, if we had more time, we'd spend more time doing it. But again, this is a very quick session. So, so next class we'll do the chapter 2 practice exam, and then I'll send out the exam. And the practice exam are very similar to the exams, and that's. There shouldn't be any surprises. I'll put it that way. The numbers will be different and that sort of thing, but there shouldn't be any surprises as far as what's actually covered. Any questions on that? Okay. Are there any questions on the chapter 1 exam? And if you do have questions, you can go ahead and text me or email me or something like that too. You know, and by the way, my nope. Yes.
So the chapter 1 exam and all the handouts are due tomorrow, the ones that we've worked on so far,
Correct.
right? Okay.
The chapter 2 handouts and the let me make sure I do this one. You should be doing the 18th, I believe. Let me check the due date. 18th. Okay. Yeah, the chapter 2 stuff will be due at the end of next week. So on Friday.
Okay.
And I think I told you guys, I think I'm gonna make Friday as the kind of and again, but now if you miss that, if you don't get it in on Friday, you're busy, whatever happens. You can turn it in late and you won't get penalized. The only thing that'll be different is that when the grade to dates are in the grade book, yours are going to look bad obviously until I get that in, because it'll show, for instance, the chapter 1 exam will be shown, and so if you don't have the chapter 1 exam, then your grade's going to look dismal. But yeah, so you can certainly turn it in after the date and you get full credit. However, it won't be in your grades until I actually grade it. I know it sounds obvious, but science people ask, well, why is my grade so bad? It turned the test due last last Wednesday. You can still turn it in, but you know your grades gonna look bad until you do. Any other questions? Okay. Well, if you're going through the test though, and if you have any questions, you can go ahead and email me or text me or whatever. I should. My phone number and all that is there. It should be there somewhere. Yeah. So if you look under syllabus and instructor information, all my stuff's there. This is the personal email. This is the school email. And that's my cell phone number. If you could call me, if I have my cell phone, I'll pick it up. If not, leave a message, or you can text me. I'll just give you a warning that a lot of times I leave my cell phone in my car. So if you call and I don't pick up, it's probably because it's in my car. So, but anyway, any questions on that? Okay. Well,
No questions.
Yeah.
I said I didn't have any questions.
Oh, okay. All right. Well, if there are no questions, then I'll see you guys next Tuesday.
All right, thank
And-
you.
and
Have a good
if you-
weekend.
If you need any help on any of the stuff, let me know. Okay, guys. Have
Okay.
fun.
Bye.